I often think about like how our destiny has been defined by certain groups, and I would like to call those ones out today. The rating agencies, the oligopolies. One of the hurdles for attracting foreign direct investment is the enormous cost of capital, and that's been driven by what the rating agencies call the country risk, which I often feel is quite misunderstood, divorced from realities, and also allows us to kind of focus a lot more on deepening our domestic markets and also deepening our engagement in the regional markets. Like we have to kind of move away from our destinies being called out by others and then call our own destinies. Now, what I would like to do is, going forward, I would like to invite my panel. Without any introduction, I'd like to bring you back again to the stage and take a seat. Also, I'd like to invite our first presenter, Chiza Charles. Are you still online, Chiza, to join us?
Yes, I am still online.
Very good. Where is the clapping, sure. Joseph? Seems like everyone has forgotten the clapping part. Welcome, Richard. And then I'd also like to invite to the panel Geoffrey Odundo, the CEO of Nairobi Securities Exchange. There is no further introduction to the CEO of Nairobi Securities Exchange. Please welcome him to the stage. Welcome, Geoffrey. Great, please. Also like to invite to the stage Lwetabe, my fellow CFA charter holder. I hope you haven't forgotten me. I still call you a friend, Alan. Come over to the stage. Welcome, Alan. Good to see you. Nice. And then I would like to invite Frezer Ayalew, Director of Banking and Supervision of the National Bank of Ethiopia. Ato Frezer wouldn't need a lot of introduction in the Ethiopian community. You all know him. Where is the clapping? You all know that the reforms are in his hands. And then finally, I'd like to invite Yared Molla, Ato Yared Molla, who is the president of the Association of Ethiopian Insurers and also the president of Ayele Insurance. Wonderful. So welcome everyone. Welcome our brothers from East Africa, from Kenya and Uganda, and also those in attendance. We really welcome you. I would like us to start with a conversation. I'm going to be asking very few questions, and I'd like to open this question and answer to the audience. Richard, I know you had at the last slide that you had a Q&A, and this is an opportunity for you to get those questions streaming from our audience out here. My first question actually goes to Ato Frezer. Give us a sense of the work that's been done to open up Ethiopia, to open up to our neighbors, to the region. Dr. Gebretsadik already said it's sometimes uncomfortable to walk to an East African country and then have to pay in US dollars or euros. Ethiopian currency is not accepted. We probably do the same with the Kenyan shillings or Ugandan shillings. So, Ato Frezer, please tell us what does it entail to open up Ethiopian economy?
Okay, thank you for having me. Just to begin with, I think the theme of the topic is on financial sector liberalization. And financial sector liberalization is a broader topic that entails, the liberalization and deregulation of, many elements underneath, including interest rate, capital account, and other issues. But at this point, Ethiopia is pursuing, and political decision has been taken not to, liberalize the financial sector in its full extent, but to open up, the banking system for foreign investment. So I think we have to be clear between the two. But, the liberalization of the financial sector will follow suit, in a more thoughtful and sequential manner. But for the time being, the opening up is being considered. So having said this, one of the issues is that, there has to be, economic integration within Africa, and this will allow, trade and investment happening in the continent to a larger volume, and this will drive, the economic growth of, various jurisdictions within Africa. But for this to happen, I think, integration of the financial system is very critical. Without having this in place at first, it will be difficult to ensure that, regional economic integration is happening. And for that reason, I think the fact that we are in the stage of, opening up, the banking system for foreign investment is a very good opportunity in terms of, allowing, integration and harmonization of, our legal and regulatory frameworks, and also, as you said, integration of the payment and settlement system within African continent. We have been working on integration of our payment and settlement system with the Pan-African payment and settlement system, with the stock exchange and other issues. So this all aligned will make sure that, the integration of, regional economies is happening to a full extent in our continent. But from opening perspective, there is a political decision that has been already made to open up the banking system for foreign investment. And the policy framework has also been, adopted. We are now working on the revision of the legal framework, including, the drafting of directives that will allow for the licensing of, foreign investors to our, financial system. Hopefully, this will create, a more enabling and integrated, society within Africa and beyond.
That's a wonderful intro to this panel discussion. It's going to be very exciting. I think the follow-up question, and also a question to Yared, is, has any thought been given to opening up the insurance sector? Because we all know that if the banking sector is not open, of course you cannot do business in Ethiopia. But insurance, interestingly, although it was not open, foreign insurers can technically underwrite policies in Ethiopia, and they did do so. So my question is, what has been the thought given to the insurance sector? Ato Frezer and Ato Yared, please.
Thank you. Liberalization of insurance, it's our fear that insurance again being left out, but today, this morning, in his opening remark, Ato Solomon assured us that after the independent subsequent action be to liberalize the insurance market. So we are now confident that the next phase will be the liberalizing the insurance market. But as you said it earlier, insurance by its nature is global. Now we are working as a global element of the insurance. Most of the insurance colleagues here with me perfectly understand that insurance be written in Ethiopia or in New York or in London, all the same. So most of our projects underwriting elements are the same. So the only thing that remains is to increase the efficiency. It comes to our minds that whenever we hear about the liberalization, there is a fear of unknown, that we might be overtaken, something bad is going to happen to us. But evidence from other countries who went that shows us there is nothing that happened. It rather developed the industry, also the economy. So it's good news today that we heard about the liberalization of insurance. And we are quite eager to look into the implementation strategy. Thank you.
Wonderful. I think my next question is for Chiza, who is online. I hope you'll be able to hear me. Can you hear me properly, Chiza?
Yes, I can hear you, Mr. Moderator.
Great. So we're looking at the African continental trade association, the accession of Ethiopia and the implementation. The question I'm going to ask is, you said that we've been delayed, it's been lagging behind. And if Ethiopia moves forward, are you ready to take one of the biggest economies of East Africa and a thriving economy of the sub-Saharan Africa to come in the fold and be impactful? What would be some of the recommendations that you have that Ethiopia can put in place right now to speed up that process?
Thank you so much, Mr. Moderator, for the question. Let me just clarify that yes, Ethiopia is yet to submit a schedule of liberalization on services. But what we know is that they are preparing to do that. And for a bigger economy like Ethiopia, we understand that they have to take their time and do so thoughtfully and do so with this tactic and strategy. Ethiopia is a big market. So when you are talking about trade liberalization, whether it's in trading goods or trading services, you have two positions. What you call offensive position, just like in soccer or football, and the defensive position, which is like the defender. So that when you are opening up, it should not hurt your economy. So we understand that Ethiopia is going through that process to make sure that when it opens up, it's gonna benefit, it's gonna win into this game of liberalization. So it's really important that the country takes its time and opens when it's ready to do so. When you're talking about liberalization again, for countries like Ethiopia, they are given a leeway in the period in which they can do their liberalization. So it's also very important for them to take advantage of that period that has been given for them to prepare. Because if you just open up without tactic, if you open up without really giving further thought into how you effectively do it, it's gonna hurt the economy, and we don't want that to happen. That's why even at the African Union Commission, at the African Continental Free Trade Area Secretariat, we always have experts that support countries when it comes to liberalization. Now, for Ethiopia, I think what needs to be done, and I'm sure the country is already doing this, is to look at your strengths and weaknesses. You have already said that Ethiopia is a big economy. That is a big strength. Then you say, if we open up, what are we going to gain? For example, if we open up the banking sector, how is that going to affect the economy? How is it going to affect trade? So you make sure that you have laid out that effectively very well. Then the second thing that needs to do is to make sure that the private sector, who are the major players in this game, are able to understand what is happening. So I would encourage more and more consultation with the private sector when it comes to liberalization. So Ethiopia has to continue contacting the private sector to listen to them, to know their positions, to understand, because at the end of the day, it's not really the government that trades, it's the private sector, whether the banking sector, whether it's the insurance sector, that is going to play in this market. So if these people are not taken on board, it will be difficult for Ethiopia to implement the agreement, even if they sign it today. Because at the end of the day, the actual players will not be in the game. So I think those are the two pieces of advice that I would quickly give just because of the time. But if there's more time, we can list some more issues that needs to be done. Thank you, Mr. Moderator.
That's fantastic. I think when we talk about like regional integration, each country asks about what are we going to get out of it? How is going to benefit us? Maybe a question to ask is, what is it I'm going to give? And how is it that I'm going to benefit the region by integrating? And I think that sort of paradigm shift is going to be needed, because we know how Europe integrated and became one under a European Union. If those strong nations were to sit back and say, what are we going to get out of it, that wouldn't have been a shift. They obviously had to think about, like, what is it that we're going to give and bring everyone to the fold, and I think that's what we're going to do. Now, my next question is, of course, for Geoffrey and Richard. You both can, Alan, feel free to jump in as well. I'm going to ask two questions at once because we still have to open the floor to the audience. Now, in regards to like the capital markets development and liberalization of the financial sector, regional integration, as a latecomer, Ethiopia has its own advantages because there are less of a legacy issues that you all had to deal through. But a latecomer also gives us an advantage to learn from your experiences. We've been waiting for you to make the mistake so that we can take advantage of that. So give us a sense of what is... Geoffrey, please, first.
Thank you very much. First of all, I'm happy to be home. I think that's what I was told, welcome home. Because Ethiopia and Kenya have a lot of similarities. We are both countries of great marathoners and record breakers. I think before I answer your question, I'd like to just comment on a couple of things that I've heard in the conference today, especially relating to liberalization. I know the liberalization discussion takes time to innate. I mean, it's a fearful step that you want to take. But one thing that I can tell you about Kenya is that we are always a country of faith. So we take the leap of faith in certain things. And a very good example is the M-Pesa story that Richard has ably captured, where it has taken us forward. The other thing is that when you think about liberalization, you're really thinking about being part of the global ecosystem. And there are benefits, great immense benefits to draw with the global ecosystem. You're talking about international trade, you're talking about innovation, you're talking about capacity, you're talking about new markets, the SCFTA discussion. So I think these are the things that, as we discuss, we need to start innating that these are some advantages that we need to adopt. On the contrary, again, what are the challenges or what are the fears? I think taking prescriptive ideas is not the way to go. I think you need to look at what are the needs for the local country. One of the things we look in Kenya is that what is the solution? One thing I like about our president, he says, do a new idea. It doesn't have to have been seen anywhere. Just do it. And one of the things we did in our market is that we came up with the world's first mobile retail bond, Emakiba, that Richard ably captured. So Kenyans today can actually buy a government bond from the comfort of their phones. Everything happens on the phone. You can actually trade it on the phone. Coupons come on the phone. Maturities come on the phone. And with that, we increase the number of bond investors from 18,000 to 500,000. So that's sort of ingenious idea. So you can actually do it. It's just about that leap of faith. Now, to your question about the capital markets, what are the learnings? What are the hoops you need to jump to reach where we are? I think being a latecomer is the best thing. It's like we have been the pace setters, now the real runners are coming. We have developed products, we have developed infrastructures, we have come up with technology, we have come up with financial education content. All these are available for you. So there's no creation. There's no need to start from the scratch. So you're able to reduce the learning curve by coming to the market and partnering with established players like ourselves. We also benefited from other earlier exchanges. For instance, we worked with Johannesburg to develop a lot of our things that we have in the market today. So we avoided all the mistakes they made. Or rather, we asked them, give us your strategic document and tell us what were your mistakes. We didn't tell us your success, tell us your mistakes. And those are the things we avoided. So I think that Ethiopia can take a similar trajectory, take our script. We have opened ourselves to help Ethiopia as a country. I was telling Dr. Gamechu that in Kenya we don't have, when it comes to our East African partners and Africa brothers, we don't have what I'll call, we don't restrict ourselves to giving you our content. So if you want our strategic document, it's something that we can share with you. Because we're not in competition, we're in partnerships. We would like to see cross-border trading between Kenya and Ethiopia. We'd like to see markets, cross-listings in Ethiopia and Kenya. So we would like to see how we can give you more and more ideas to develop your market. I was telling my friends that now that you have such an airport hotel, you can be sure that a lot of Kenyans will actually live here and be able to provide you with these kind of ideas. I'm happy to see Safaricom has opened the way, and a lot of other players are willing to come. So do not make the mistakes we made. Ask the questions, involve partnerships, and a lot will be achieved.
That's wonderful. We said it already, like, what do we have to give instead of what have we to receive? And thank you for offering that. Maybe I would like to give the opportunity to Alan, my brother, to put on a few words out here.
Thank you, Fassil. I don't want to speak after my boss has shared the vision of East Africa. But I can also share some viewpoints that I've seen over the past couple of years using Uganda and Rwanda, which markets I'm more familiar with, and how they are evolving. And perhaps as Ethiopia, we could learn from their journey. Now, when I look at Rwanda, which is where you are, in the last 4 years, they have aggressively changed the way they reorganize their economy, their vision on their place. I like one thing about Rwanda is that they have a grander vision at a political level. And this is something that for me, I want to share here, that even as we are thinking about liberalization, what is the grand vision of your financial sector? And who is setting that grand vision? Rwanda desires to become an international financial center, competing with Dubai, competing with Singapore, competing with Mauritius. That is massive. I first heard about this at a coffee I had with a colleague of mine 4 years ago. And today, Rwanda has the Kigali IFC. Rwanda has put in place legislation, and now they are moving towards attracting investors to domicile in Kigali. Now, when I look at Uganda on the other side, our journey in liberalization was based out of necessity. We had come out of almost 20 years of war, from 1966 to 86. Our economy was really on the lowest levels. And so the first aspect that happened was a currency reform in 1987. If perhaps you could guide me, how much is the cost of bread in Ethiopian bra?
I eat bread all the time. I think 10 there now. Yes.
10?
I got it right.
Is it 10?
Yes.
So assuming, now for us in Uganda, at the time in 86, to buy a loaf of bread, it will cost you about 1,000 of your currency today. And so there was need to reduce that aspect, because if bread is costing 1,000 bra, you can imagine how useful the money is to buy a car or a house. So one of the first aspects Uganda did was to do a currency reform. And that was in 1987, where if you had over 10 million bra in your bank, you had to lose up to 30% of that through a number of measures. So that was the first aspect to manage the currency, and this is why Uganda's liberalization journey was out of necessity. So the next thing was that Uganda had not paid its debts to the global investors and lenders for over 15 years. From 1975 to 87, we hadn't actually paid our debts. And so one of the things that happened in 1991 was we received a waiver on our debt under the Highly Indebted Poor Countries Initiative. So that meant that most of our debts were forgiven, but for the debts to be forgiven, there were things we were required to do. And one of them was to participate in the IMF Structural Adjustment Program, where we had to manage our public sector, reduce the number of workers, and open up our economy. So our journey into our journey into liberalization was more of a necessity. So we opened up the capital account in '92. We liberalized the exchange rate in '93. And then, of course, the banking sector was gradually opened up, resulting in a new law in 2004. So we can see that for Uganda's case, ours has been phased, but not phased because of choice, but out of the circumstances we find ourselves in. So when I'm looking at where Ethiopia is, there's a lot you can learn from both countries. And this is a story we share with Kigali as well, that when you are thinking about liberalization, think holistically. If we do piecemeal, you are likely to have challenges down the line. I was trying to inquire before that how is your pension sector? Is that liberalized? Is it managed by a mandatory scheme that is national? How do you allocate the cost of financing? How is money or money determined? Is it determined centrally by a group of people sitting in a committee and saying a mortgage should be 10%? Or is it market driven? Is it that the market, the different banks are able to determine? If we are looking at fund managers, is the market for fund managers also liberalized? Because those are going to be very key in managing some of the assets that will come from pensions and insurance. And then we also have to look at things to do with venture capital and private equity. Is the tax code, the investment code supportive of money that is not within the banking sector also coming in? So in terms of liberalization, my view is that it's important to think holistically, have a grand vision as a country, and prepare your legal frameworks to be able to support not only the banking sector, the insurance sector, pensions, fund management. All those have to be liberalized if we were to achieve a grander change at a national level. But I'll close with one thing. Liberalization is not going to change the levels of unemployment. This is a problem we have had in Uganda. Whenever we go to parliament, there is a question that we liberalize the economy, but there are not enough jobs. The things that we have to be mindful about, that liberalization is going to address macro questions. Macro questions. The things about how many youth, women are getting jobs is a different question that speaks to the talents you have, how you are training people, and the opportunities we are creating. And so we have to be very clear on what we are gaining out of liberalization. It has to be about solving issues to do with how we set national prices for exchange rates, interest rates, and how we encourage money to complement domestic savings, how we bring in foreign investors as well to help us build dams, build new airports, build new roads. That should be the understanding when we're discussing some of these aspects.
Yeah, that's a very thoughtful response. Thank you for that response. And you know, every time we think about liberalization, I don't know of any country that has done it from a level of comfort. Now we have everything set, we're good, so let's liberalize. It's never happened that way unless you are an oil-rich country where you've been giving, your citizens X amount of dollars every year to subsidize their living standards. But we all come from that discomfort of being put through with the situations that we're in. Again, the other thoughts that you've brought up, quite interesting, is that there is no clear way of liberalizing it. There's definitely political considerations that need to be taken care of. Unemployment, if you're not able to solve that, anyone can question the wisdom of liberalization. And what happens with Ethiopia is, as I said it earlier, it's a thoughtful and deliberate process. And it doesn't happen linearly, of course. Frezer is sitting here, and he also outlined what that opening up is going to look like. Now, With that, I will go for the next question to Richard. I would like you to give us what are the specific experience of East African countries? Because Genesis Analytics, you've been part of, witnessing those liberalizations and how it's been done. Every country it's been done differently. There are definitely political considerations. So give us a sense of what you've seen in those African countries you've been operating, you've been witnessing those liberalization processes.
Thank you very much. I think let's start with Uganda. So what should give you some comfort is when Uganda liberalized the exchange rate in 1993, for the next 10 years, Uganda's foreign investment increased from less than 1% of GDP to almost 10% of GDP. So Uganda's tremendous growth in the post-liberalization period was principally the result of the decision to liberalize the exchange rate. Once investors knew that the currency was going to be well managed, they flooded into the economy. So that should give you some comfort. I think what we've also seen from the Kenyan example is, again, to use your running analogy, just do it. Once you create an opportunity for experimentation in which the private sector feels comfortable investing, they do come in. And again, Kenya has, over the last 10, 15 years, seen an enormous flood of foreign investment, often micro investments, fintechs, small businesses, as well as the large companies like Safaricom that have continued to grow and innovate. But when we look at the capital markets in particular, I think it's important to take some of the salutary lessons from the rest of Africa as well. I don't think capital markets, although they're essential, have necessarily fulfilled their potential in most of the markets in East Africa. And this is some combination of the fact that over the last 15 years, globally, more money has flowed into private markets than have flowed into public markets, and that many of the companies in many of the other Eastern African countries have not really seen the benefit of listing. And part of that comes down to the cost of operating in a public capital market. So the real challenge and opportunity for Ethiopia is to make sure that we create a fully encompassing capital market environment with the right protections and regulations, but that we keep the cost low. That we don't replicate the kind of costly infrastructures that traditionally surrounded stock exchanges, etc., to make sure that companies do see raising money in the public space as being to their advantage, and that we have the supporting reforms of the insurance market and the pension market. If you look at any stock market in the world, a huge proportion of the funds in the stock market come from the pension industry, come from the insurance industry. So you have to have this balance between companies that are seeking to raise funds, which we do have in Ethiopia. We've got lots of large companies, but we also need people who want to invest in those funds and the institutions enabled to invest in those funds. So still a lot of work to be done to make sure that this experiment is a success in Ethiopia.
That's an interesting take, and I fully agree with that. But there are still a lot of things that we need to question. Particularly the case of Uganda, where they liberalized, they were able to attract foreign direct investment, which is great. I already started off by alluding my concern about, the country risk ratings by Moody's, Fitch, and Standard & Poor's, how it drives the cost of equity, and how it makes it difficult to attract investment in Ethiopia and in the East African region and the Sub-Saharan in general. We need to question that, because how is it possible that they can fund projects like WeWork, companies that have failed, almost like a crazy bet on startups, with lower success rate and fail, and the cost of equity for those initiatives were far lower than the cost of equity for life-changing investments in Africa, in infrastructure, in services, and in agriculture, where there is a market of about 120 million people in Ethiopia, and of course, if you look at the entire East Africa, is close to 300 million, if not more. And there is a real sector that's not able to attract this massive institutional investment from, the rest of the world, where capital is supposed to be cheap, and we're just being taken hostage of the credit rating agencies. They tell us you need to be rated so that you can raise, and then there's a curse of being rated. So I think I'd like to open for further questions from the audience. Can someone help me move around the mic? Are there any questions, or have I covered all your questions? I'm probably brilliant. If that's the case, please let me know. Oh, there's a question from my friend there. Okay, one. All right, second question there. I also like to invite Alan to respond to about like how the importance of developing the human capital and professionalism in the investment space is so important. But along with the questions, can anyone run around the mic, please?
Okay. Thank you, Fassil. I wanted to first comment on the rating agencies. The way we see it from Kampala is that it's important to demonstrate trust and to be transparent to investors, either whether they are buying domestic debt or they are buying our foreign currency denominated debt. Now, given the history of Uganda that I highlighted before, that we had come from a place where there was a deficit in trust with global lenders. So a decision was taken to be transparent and accountable for the money we receive. And so as a government policy, Uganda is open to scrutiny. We invite the rating agencies every year. I've participated in about 6 years of those ratings with Fitch, Standard & Poor's, and Moody's. Every year they come to Kampala, they can speak to anybody they want to speak to, whether the president or a junior staff or a bank, to understand what's happening in the country. And when they write their reports, we don't try to manipulate their voice. We want them to have a free view of what's happening in Uganda. Because we have found to our advantage that the more transparent we are, the easier it is to communicate our intentions as a country, but also for investors to be confident that our policies are going to be followed consistently. And so it's been a deliberate effort for us to be rated. And if you notice, over the last 15 years, Uganda has maintained its B-level rating across the 3 rating agencies, which has been very good for us, leading to the new funding for the oil and gas sector. We are seeing now interest in the gold sector as well. So we are seeing a lot of investors who don't need a government certificate to bring in $1 million plus. All you have to do is sit in London. If you find an investment opportunity in Uganda, you can come buy land, set up a factory, start to export, make money. If you feel the business is done, you can exit with your money, with your $10 million. Very few questions asked, as long as the money comes through official channels. So we have found that even when we participate this way, it's been very positive for Uganda in terms of giving that confidence in the economy. So before you come back, on the issue of talent, it is a big question. For Uganda's case, when I joined the industry in 2006, we had about 16 commercial banks. 80% of those banks were led by Kenyan MDs. A few were led by Indian MDs, and a couple were UK or British MDs. So there was no Ugandan MD in the market at the time. And there were conversations. Is this fair? Should we put a law to require all these banks to have a Ugandan to lead a bank? But the governor at the time was very strong. And he was very clear in his messaging that as long as the local talent is not sufficient, has not been tested with experience, they cannot lead a bank to that level. And so for the last 15 years, the efforts have been on building talent from the ground up. And I'm happy to say right now, we have over 60% of the MDs in the Ghana market are Ugandans. And so it's been organic. It wasn't forced. It was organic. So it has to be something that we are mindful about, that as we are opening up these economies, initially, some of the foreign banks may want to bring their own talents, especially for the CFO, the CEO roles. They may want to bring in their own people to ensure that they maintain brand and consistency. But over time, you will see that more Ethiopians will be taking over these roles. So I believe it's a conversation that we need to have, but also understand the implications as we liberalize the banking sector.
Thank you for your response on the credit agencies. I know I go hard on them, but the takeaway is fight, at the same time get better. Work on yourself and get better. Let's pass on for a question over there to my friend, please.
Okay, thank you, Fassil. Thank you very much for the very excellent presentation and the very excellent expression of views of the panelists. When looking at the theme, Emerging Frontiers in Africa, one of the pillars is regional integration. You know, what comes to my mind is when regional integration is done, there must be a level playground, you know, or the infrastructure has to be leveled. For example, in insurance, for example, the regulatory framework in many countries are different. In some countries, it's prudential supervision. In some countries, it's Solvency II, and so on. So what do you do, you know, if our insurance sector opens up? Does a country have to adopt, you know, a kind of, like, for example, the current regulatory framework is Solvency II. Do we have to adopt that or what? Because we have to play on the same level ground.
That's a good question. Do you know who you're directing that question to?
I don't,
Okay.
but
to anyone to the
anybody
audience.
can
we
answer.
take 2 more other questions, please? And if you could relieve me from summarizing it, you'll make it short.
Thank you very much, Mr. Moderator. My name is John Mwebembezi from Uganda. I work in the microfinance sector, and our mandate is to provide financial services and develop capacities of micro, small, and medium enterprises. I have 2 comments which result in maybe 2 questions. One, of course, I want to salute the leadership of this country, because for me, growing this economy to this level in a very closed and controlled environment, I wonder how you've been doing it. And I'm sure you have very good practices you've been doing. And as you liberalize, don't throw away your practices through the window. Maybe I just improve them. You might be having very unique practices, which maybe we also need to learn, because we have also liberalized, but we have very serious challenges. So maybe the question is, how have you been doing it? We also need to learn from that. The second comment is on capacity building, because this is what I do. Capacity building of your people, nationals, and your enterprises, small, medium, big, whatever. If you open up, of course, there's a lot that is coming in, like the moderators have been saying. You have to learn fast. You need to adapt. So many things, technologies and what is government doing to develop? How much are they investing to develop quickly their people, their local businesses, so that they can catch up with a host of what is coming in? Thank you very much.
Thank you so much. So I would like to invite my panel to answer those questions. Feel free to, snatch away the mic if you need to speak, and then please take it away.
All right, I'll go first. Now, on the regional integration, I think that's a very good question. It's a very, very important thing. We must create regional integration blocks. We must have trading blocks. We must have unions in currency, in monetary, and probably in the long term political. I think this is what you're seeing in Europe. The growth of economic blocs have been very beneficial in helping countries all come up and achieve some level of equity across various markets. And then you all work around what's your comparative advantage to sort of help you grow. But I think you have a very good point. How do you ensure that the regional integration does not take away your birthright? I like the comment from the gentleman next to you that liberalization has also got to be managed. It can't just be an open envelope. You have got to open it in phases, and that makes sense. So I think what we've done in Kenya is that when we get an idea, if it's an international best practice, there's need to validate it using local standards. Is it relevant? Is it going to help us improve our processes and systems, as opposed to just opening it up and putting it to achieve that level of risk? He spoke about harmonization of regulation and policies. I think what I was happy today when I was hearing the CEO of the Capital Markets Authority speaking, I could relate so well. In fact, I thought he's the CEO of the Nairobi Capital Markets speaking. So there's talent already here in terms of knowledge, in terms of what you need to do to take it forward. So I think the policies that you put in place have got to be domesticated. Let's not just adopt policies because they're used in other jurisdictions. It's important to domesticate them so that they are relevant and help you bring up the regional levels. And I think then partnerships and integration. And I was in my comments to the media, I think you have to be part of associations, that industry associations at a Pan-African level. Like for instance, in the capital markets, security exchanges have an association called the Africa Securities Association. Now, being part of that then helps you get a holistic view of what's happening across the continent in terms of policies, in terms of capacity, in terms of talent, and then you can be able to see how these can be adapted into your ecosystem. So I think that's very important. I wanted to make a comment about insurance. I had a background in insurance. Now, life and health insurance, I think, is the way to go. The penetration levels in Africa are so low, yet these are very important policies. Two things, because one, they help improve the quality of life for your people. Having a life and health insurance improves the quality of life. Two, they provide very good mechanisms for capital formation, because these are long-term funds. They do help improve your levels of savings in a country. So I think insurance should not be just a good to have. It's a necessity. We'd like to see penetration levels increase, and the way to go is to do microinsurance. Let's have policies to address the bottom of the pyramid. Let everybody have a health insurance at that level. And that's going to be one way to really improve not only quality of life, but also capital formation for the country. Thank you.
That's good. Anyone wants to snatch away the mic? Maybe let's give it to Yared.
I wanted to just speak to his question about harmonization as well, that at ESC level, the 6 countries regularly meet on a quarterly basis across different sectors: insurance, banking supervision, deposit insurance, capital markets, to discuss issues around harmonization of our rules. If you look at the banking sector for the East African countries, we have now harmonized issues around capital, the level of capital that banks are required to hold. We actually have very similar levels, such that if a bank is coming from Kenya and wants to domicile in Uganda, they don't change the way they operate, because in their home country, they have similar rules. So these are the conversations that are helping us to deepen our integration within East Africa. And I believe we'll be happy to have Ethiopia coming in to monitor, to see whether they are comfortable with the rules that are happening, because this is how we are, protecting our home markets, but also we are creating best standards within the East Africa region. So there are so many mechanisms that you can tap into to raise the standards within your market, but also not to lose your local rules as you integrate.
Thank you, Alan. I think Yared wants to speak. You know, about insurance, we probably have, I'm going to say something very controversial here. እግዚአብሔር ያውቃል ነው የምንለው እና of course God knows and gave us insurance. Let's deepen the insurance market. Please, Ato Yared.
I think, thank you, Ato Tedros, for raising this very important question. I think I want to go to the bottom of this. It's very important. What do we mean whenever we say that the level of the insurance development is so low in Ethiopia? There are two basic parameters for measuring insurance development in the whole world. The first one is what we call insurance penetration rate. Richard has mentioned that. Insurance penetration, what we mean by that is the contribution of insurance growth written premium as compared to the GDP. So Ethiopia, currently, we have 0.4%, whereas well, our friends from East Africa, they have already said it enough, just like 2.2% in Kenya now currently, and like 40-something percent, 30.47% in South Africa. The next, a very essential parametric measure for the development of insurance is insurance density, or what we call premium per capita. So currently, the premium per capita for Ethiopia is only $3 $3 that each of you are combinedly average paid for the insurance premium. So this is still substantially low by all measures. When we compare this again from East African standards, it's $42 in Kenya, and also $648 in South Africa. Look, both measures are still by far low in our country. So it is very important that to go out from our comfort zone and ask ourselves, do we have the right products? Are we really seamlessly serving our customers? What is the rate of innovation and change? This all culminates to invite the liberalization of the insurance market. But when you liberalize the market, there are also certain or numerous challenges and problems that one of the issue has raised by Ato Tedros. When you liberalize the insurance industry, you can't simply invite everyone from day one and go ahead, the market is yours. It shouldn't be like that. Number one, it has to be a phased approach, a step-by-step approach. For instance, in our market, when you see the penetration level of life insurance, even from the general side, still is by far low. Numbers, so maybe in the afternoon, there is a very good presentation for that. It's like the maximum penetration is below 1%, the general insurance penetration from the aggregate, the total insurance penetration. So we are not doing good to serve the market in terms of life insurance. So we can invite life insurance for the first phase, and then maybe after assessing its performance, we can go on for the general insurance aspect. But there are still certain issues that we need to consider. Number one, the mindset of insurance is so, we have to change that mindset. Here in Ethiopia, insurance is when your door is knocked, when an intermediary or a broker or an agent is coming to you, that you start thinking about insurance. In other markets, insurance is a daily life. Every cost, every transaction has a life insurance aspect in it. Number two, so the very essence of that insurance should not be annexed like what we have here. So insurance becomes a daily life. The other thing that we need to consider is the taxation issue, the financial market strategy, the investment strategy, and finally, the regulatory perspective that will take us to Ato Tedros' question. Regulatory, currently, I would be very happy to see if Ato Balai was here. But the thing is, it's more on supervision than enhancing and enabling insurance companies. So when you liberalize the insurance industry, you need to focus on risk-based governance, risk-based regulation. And of course, the African partners, the East Africans, they are here already, but mentioning on others, the recent phenomena for liberalization next to the East Africa is in early 90s for BRICS countries. When we look into the experience of the BRICS countries, Solvency II, as you mentioned it rightfully, it was the place. So, two things, Solvency II and risk-based governance are two key elements that we need to consider when liberalization. But since we are not yet there, it's a time to discuss. So let's discuss on it. It's good that the government should not sit aside or close the door and decide by itself. All the experts are here. Let's discuss on it. Let's discuss on its benefits, disadvantages, and also the phased approach. Thank you.
Thank you, Yared. FSD Ethiopia is committed to help develop the insurance sector. We are currently engaged on a microfinance, micro insurance area. We helped launch the Bima Labs, and then we're also trying to bring in like the Bima Labs into Ethiopia. My colleague Ayele is here. He will talk more about it later on when he gets the platform. One of the interesting aspects for us to develop the insurance sector is because of the surplus funds it generates that can be investable into the capital markets. We have the pension right now as an institutional investor, and insurance is certainly an institutional investor that we like to bring into the capital markets to bring in, much needed investment, patient investment when it comes to particularly, your proceeds, your policies from life insurance can be invested over a long period of time. Now, let's open up for further questions. I know I'm going to be stretching my luck until someone comes and takes us away from the stage. The snack during the health break was sufficient enough to sustain us for another 20 more minutes.
And my question is directly for Ato Yared, as a former boss of mine. And I'd like to ask a question around digital technologies and what is the strategy of the insurance sector for the digital adoption. And because to succeed in the environment and when we liberalize and to stay competitive in the environment, we have to also work on the digital aspect of the insurance. So what is the strategy or the vision of the insurance sector into investing in or developing on digital transformations and the digital skills of the insurance sector?
Thank you. Thank you so much.
Yeah.
Further questions? I see there's one hand because, can you please raise your hands so that I can see you? I'm so far, okay, there's a question over there. Maybe you could just pass on the mic. Oh, okay, yeah, please.
Okay, thank you. My name is Nagatu and I'm from Amara Bank. My question is on integrational aspect with respect to Ethiopia. We are a bit reluctant to integrate in African markets, for instance, in Eastern African market, in COMESA and some other African markets, as the presenter earlier disclosed that we are yet to join the African Free EFCTA. And on the other hand, paradoxically, we are trying to join WTO, and we have been trying to join WTO for a long time. And how do you see the paradox that the person from the African Commission presented the continent, the integrational aspect, and what could be its reflection on that? And the misgivings with the rating agency, and I share a lot of points with you, and rightfully, don't they have their government interest at their heart when rating our companies or our country status? And probably you may reflect, a guy from Uganda, on that. What was your experience in that respect? The other is for Ato Yared Molla. I was surprised to see he was very enthusiastic in inviting the insurance sector for foreign investment. I'm not sure if there are many bankers so enthusiastic as him. What makes you so enthusiastic to invite foreign investment in insurance sector? Are we quite ready to accept foreign investment in this sector? Because I see many banking industry leaders so reluctant to, at least they are not yet ready to accept foreign investment as you do.
Thank you so much. Those are really good questions. I really want hands out from the ladies. I don't want this to be a male-dominated. No, I'm looking for a hand out from the ladies, please. But I apologize, we don't have anyone on the panel from the other gender. It's not a mistake that I made, but like, look, if we're talking about inclusion, that also includes about like listening to perspectives from everyone. Anyone over there, please? Thank you. Thank you, you saved me.
Thank you. My name is Kanani Wargu. I am from Ethiopian Reinsurance. My question is for gentlemen from Kenya and Uganda. Please, would you mind share us the foreign currency problems you have encountered and how you solve it? For it has been mentioned as a problem and difficult on operation conditions. Would you mind share how you managed it? Thank you.
I think those are really good questions. Maybe one more real quick and then we'll get it back to the panel, please.
Thank you. My name is Bernard Kipkemoy. I represent East Africa Holdings. All right. So my question is basically the strategy that we'll use to integrate the different societal groups. I'm hearing about banks here. I'm hearing about insurance companies. I'm not hearing about the women. Like in Kenya, we have societies for women. We call them chama. We have for young legal professions, engineers, and here and there. What strategy are we going to implement on this specific integration?
Thank you so much. Since I'm not able to summarize the questions, and I hope the panel have taken their own questions, let's again snatch away the mic. Who wants to go first? Oh, Ato Yared, please.
Allow me to come in from online, if possible.
Go ahead.
Thank you so much. I think there was a question from the distinguished gentleman that talked about the WTO versus local integration. First of all, I just want to indicate one thing. The example of the COVID pandemic emphasized one thing to the world, that we are a global family. Whether we want to be or we don't want to be, we have to be part of the global family. How do you become part of a global family? The best example that has existed for centuries is through regional integration and the global integration. So the WTO allows us to become part and parcel of the global trading system or the global trading family. And therefore, it's really absolutely important that Ethiopia becomes part and parcel of the WTO. Now, with the WTO, there is one challenge, which is that if you are joining at a later stage, it is quite difficult because right now I think it has a membership of about 160 plus countries. Then each of that member has to negotiate with the country that wants to join. To say, Ethiopia, if you want to come in, this is what I would want from your market. So it really becomes hard to do that. And it is for that reason that Ethiopia has taken a long time to join, because the negotiations now become very lengthy, because you were not there when the negotiations were starting. Now, the African Continental Free Trade Area is different. Ethiopia is already at the table of the negotiations. So there will be no need for it to come in later and negotiate with the rest of the 54 countries. Ethiopia is already there. As I indicated, Ethiopia signed the agreement already. Ethiopia has also already ratified the agreement. Signing and ratifying is an intention that it is ready to do that. So the rest are just the mechanics to say, how do we participate? For example, when we are talking about trading goods, Ethiopia has already given its what we call tariff offers, the things that is going to lower tariffs on. But it's on services where its offers are yet to be submitted. So Ethiopia is part and parcel of the trading system, which is already there. Having said that, I would like to say that when you're talking about integration, it starts at home. So it would be good that Ethiopia becomes part and parcel of the regional blocs. It's already a member of COMESA, even though it does not participate in the free trade area in that area. But now it is becoming part of the world. But there's another element which is very, very important when you are liberalizing. It's not just that you are going to open market and then the magic is going to happen. There is work which has to be done behind it. We have to invest in the process. And some of the investments needed is some things that I think the panel has already talked about. Building the right talent, identifying the right sectors, all that is important. For example, if you're talking about digital, there has to be a good digital infrastructure in the country to attract investments that are going to show the benefits of the liberalization. So it's a whole track of work to be done. And how best do you do that is coming up with a national liberalization strategy. I know Ethiopia is already working on what is called the National AfCFTA strategy, which asks the basic question to say, how are we going to benefit from all this process? So that is absolutely important, and there is need that Ethiopia invests in that, so that when they are opening up, they will be ready for the enlarged market and for the region. I hope I've satisfied the questions that were asked. Thank you. I would like to stop there.
Thank you, Chiza. Thank you, Chiza, for jumping in. Really appreciate it. Yared, please.
Thank you. I got two questions, both of them very exciting. So let me try to address each one of them. The first one is about the digitalization of insurance product or the insurance service at all. Look, the very essence of the insurance market is like 70–80% of the customers are returning customers. Only like maximum 30–25% are new customers. So the very base of insurance product is returning customers, or the customers we already established relationship. But due to the digitalization now, this has been disrupted everywhere. Now, returning customers are, well, we cannot be very proud about the customers what we used to have last year. This year, we have to be competitive, we have to be available, especially the new generation. The new generation of insurance buyers look convenience. So convenience is about buying your product wherever you are available, wherever it is available. You shouldn't come to our office to buy our products. So to avail our products, we need to digitalize our products or InsurTech. Utilization of InsurTech has transformed and it's been disrupted everywhere. It is not the choice, it is mandatory that every insurance company in Ethiopia must focus and invest on InsurTech technologies. I'm sure all of you already are familiar with the impact of digitalization. Big tech companies, as well as small and startup, small InsurTech companies are disrupting. So if we traditionally kept on trying and renewing our business, we are going to be out of the business. We are going to be dinosaurs. We wouldn't be here to compete in the market. So it is no more a luxury to invest in digitalization, and I'm sure most of insurance companies in Ethiopia, including my company, Ayele Insurance, are ready and investing in digitalization initiatives. This is ቅንጦት አይደለም ግዴታ ነው. The second question is from my friend from Amhara Bank. Why are you so enthusiastic about big liberalization while the banking sector is shivering that something new is coming? Why is so different about insurance? Number one, this is not of course my company is a corporate citizen and myself as an Ethiopian citizen. I need my country, especially growing up all my life or working in insurance industry, I want the insurance industry be equipped with at least with our East African partners. I said earlier that all the parameters show that the level of development in insurance is substantially low. So what is the solution? What has been done elsewhere? Liberalization. Of course, I'm a CEO currently of the Ayele Insurance. I'm comfortable with my seat, maybe with my salary or my benefit, but I have to think as a corporate, as a citizen. So for the nation, for the development of insurance industry, which I believe is my lifelong endeavor, I want to see the insurance industry to be transformed. And this is the only way, according to my observation, where I have seen it elsewhere. When you liberalize the market, look, number one, service, the level of service. But before that, I want to emphasize that liberalization in banking sector and liberalization in insurance are entirely different. Most of the people, including the National Bank, think that we are the same. No, we don't. We are not the same. We've been forced to be, to look like the same. Of course, you are our big brothers, but still, we believe that insurance, its dynamics, its operation, its technicality, its complexity is entirely different. Our operation is global currently. We have already familiarized with that. And all we need is to have the necessary platform, number one, to avail more new innovative products and services. Our services are still very limited. We are still selling and reselling products from the shelf, which has been in the shelf for like 40, 50 years. We need innovative products, new things. Number two, capacity building. Whenever we have transformation, you have knowledge transfer from international, well-experienced companies. So our industry colleagues, partners, they will have a better knowledge and understanding, trainings, developments, which we critically need. The other thing, we also need to have the change in industry trends, the unwanted competition, the unnecessary affiliation. It's not by competitive or excellence that currently we're competing, but different affiliation that's not heard anywhere else. So for all those mechanisms, whenever the international or globally with a well-reputation insurance companies are coming and working with us, not overtaking us, but if they are coming and buy a certain share form, which with my company, Ayele Insurance, we have researched this years ago. By the way, our expectation was like 3-4 years before that the insurance industry is going to be liberalized. So I am so much enthusiastic. By the way, Richard earlier mentioned that 4 years ago, in this platform, we were debating about the need for capital market. I was one of the panelists, and my debate was this industry, the Ethiopian market has to open for the capital market. I'm sure, where is Dr. Gamechu? He will understand that. Now look, we have Dr. Brook, the authority is already here. We are almost there. Trust me, in the years to come, we'll be able to see the fruition, the benefits of opening up of the insurance market. It is well-researched, well-prepared phenomena.
Thank you so much.
Thank you so much.
Thank you so much. Let's give it to Frezer, because he's soon going to let the insurance sector have its own regulator. I would like him to chime into the discussion.
Yeah, let me say something on the insurance sector. So as you know, it's very difficult to sell, insurance products, because the insurance companies are in the business of selling promise. And promise is not something that you can realize automatically. If you go to banks, the guys will go out with the real money. So in that case, convenience is at the heart of, offering, this insurance product. So, but with regard to, the liberalization of the insurance sector, yes, there is a difference between banks and, insurance companies, but the issue is, to what extent are the local insurance company ready, to withstand competition that's coming out of, foreign investment is a critical issue that needs to be answered. And if you see, for example, the level of, automation and, technology adoption of, the local insurance companies as compared with, the colleagues in the banking sector, you see, big difference. And I'm hoping that, such enthusiasm will not result in, the wiping out of the local insurance, companies from the market. So we need to, as much as we are enthusiastic, we need to be ready. To what extent will we, withstand competition that's coming from, the international investors? So having said this, with regard to, the opening up of the insurance sector, we are expecting that, the opening up of the insurance sector will follow suit once the banking sector, opening up is handled, and then. Of course, with the opening up of the insurance sector, definitely there's going to come with increasing adoption of international insurance business standards, like adoption of Solvency II, and this already in the making, and this is one of the initiatives that has been identified with the National Bank. So I want to just say a comment on this.
Thank you so much. Let's get the mic jump now to Richard. Did you take some notes and you want to respond to some of the questions? Okay, then Geoffrey, please.
I think, let me get the privilege of answering the lady back. The issue of the forex currency is an experience we've been through. I think I recall back in 1992-94, we had exchange controls in Kenya, where to access dollars, you had to get a certificate, go to the central bank, and then be able to purchase your items. But from 1994, the liberalization of the exchange rate began. We allowed the exchange rate to float freely, and that's been the case even now. Our exchange rate is free floating, we have no exchange controls, and we have a market that works. However, this did not come easy. We had to put a number of things in place. The first thing is that we had to strengthen the banking frameworks and allow for an interbank market to come up. Because for you to have a free-floating currency rate, you must have a very active interbank market that allows the trading of currency, and that's been the case. We also, as a country, continue to build our foreign reserves. We were aggressively growing that. At some point, we were at 6 times month cover. Right now, we're at about 4 month cover because of the current global problems. But that was another key aspect to that. The other externalized things, external to the banking sector, was about the investment policies that the country put in place. The first thing was on the ease of doing business, because you want to attract foreign investment, foreign direct investment, FDIs. And the country was very deliberate in allowing favorable investment policies to the conversation about liberalization. FDI is very important, and that comes with more currency coming in. We looked at issues of remittances. Today, foreign direct remittances from the diaspora is our second highest foreign exchange inflow that comes to the country. And I think Ethiopia is a great diaspora out there, It's good to encourage that to happen. We're also continuously building foreign FX policies. For instance, we have what we call a trading code, an FX code in the country that speaks to issues around market speculation, manipulation, and just having some form of self-regulatory framework among banks to ensure that you're not externally exposing the market. And then also, I think at the end of the day, we had a governor who was very deliberate about maintaining economic banking stability. I think that's what he said. And that has been helpful. We've seen some discipline among banks owing to the tone from the top. And that's helped grow the forex cover reserves. Now, just in a nutshell, I just thought about liberalization and why is there that perceived fear? And I just wanted to ask, how many of us have an iPhone or a Samsung in this room? Hands up. We all have. Isn't that liberalization? So I think the only constant thing in change is change itself. We have to think about how do we become part of a global market. But again, I do agree. You must allow yourself to take a phased approach. But that's really the essence of what I see. Thank you very much.
Thank you. Let's give the mic. You want to go last? If you have, we need to wrap up in 2 minutes.
Geoffrey has shared most of the things that I would have spoken around the foreign currency, exchange rate management. We did similar things in Uganda. In 1991-92, we had window 1, window 2 at the central bank. You had to walk in at the central bank, get a certificate to get foreign currency before you travel. And when you get to the airport, they will ask you to present a receipt on where you got the dollars from. And if you are coming in, people will ask you how much money you brought in.
We know that already.
We moved away from that. You can bring in $1 million in a basket. You can take out $1 million in a basket. No one is going to ask you, why are you moving money? The only question will be, how did you make it? If you have evidence, it will be okay. So, but we have had other challenges. Of course, there are issues around reserves. How a country you need to have dollars that you maintain to be able to balance the exchange rate. How much dollars and how do you earn these dollars matters. The diaspora is a good source. Exports are another good source. So it is a question of economics, how the exchange rate will move. But like all countries, it's a challenge to manage. But that's why the central bank exists, to be able to keep the exchange rate freely available, even on the person on the street. So it is something that is ever evolving. That was my job for 7 years. But we find that it's never done. It's an everyday job. The currency can depreciate, but it has to be managed. And you don't put controls, at least from the Ugandan perspective, to keep the currency stable. We try to use other market mechanisms to keep the stability of the Uganda shilling. I'll close on the ratings agencies. That
I know, I still support. Go ahead, please.
We have on our side, we have no fear that they are representing, say, the US government's view. The US government already has a representative in the central bank, so they already know enough of what's going on. They don't need to go through the rating agencies. We use the rating agencies to communicate to foreign investors on how we operate, because they are an independent voice on what we do. So if we want to speak to investors in Hong Kong, S&P will issue a report in Hong Kong, and they will trust the independent voice of the rating agency. So if, as a Ugandan, if I went to Hong Kong and presented, people might be skeptical because I'll offer an optimistic view of my country. But an independent person might give a measured view, and this is how we use rating agencies. So for us, it has been very helpful in giving us.
Thank you, Alan. You make me look like a bad student with a bad grade complaining about like a teacher. What I'm saying is we need to have more diverse views on the ratings, and it certainly is not working. If it's not working, we have to challenge it. You know, I studied finance through and through my entire life. If I were to take the formulas as were given and not have to ask a question, that wouldn't make me a good student. I'll still be happy with my bad grades though. So with that, I would like to wrap this session. Really thank the wonderful panel that have given me the opportunity to moderate the conversation. Chiza, you're online there, and I hope you'll still be able to join us for lunch. And Richard, thank you. Geoffrey, it was wonderful and very inspiring. Alan, thank you for coming to Ethiopia and share your amazing views and experiences from Uganda. Ato Frezer, thank you for blessing us with your presence. And Ato Yared, also really appreciate you for giving us a wrap on the insurance sector and the need to deepen the insurance sector further because we're so far behind. We need to move away from Xavier Akal to Xavier has given us insurance. Let's take advantage of that. So with that, a round of applause to my panels.
Thank you very much.